It's Friday. We are talking numbers. What are the financials that are coming through the banking sector and the insurance sector and also the infrastructure sector? We've seen a couple of numbers trickle into the NSC this week. So we want to be reviewing that and also review what's happening on the fiscal space. Is there liquidity in the market? Is the government able to raise the amount of funding that it needs from the domestic market, or what will happen there? To help us with this conversation is Mr. Ian Kagiri, who is an investment analyst at Cytonn. Welcome to the show, Ian.
Thank you.
Tell us what's happening on the NSC. What's been going on the last couple of days?
What we've seen for this week, especially at the NSC, turnover has remained relatively subdued during the week. It's only on Tuesday that we did see a significant, in fact, it was a 400% increase in turnover, but it was largely centered around the main counters, yes, the EABL, KCB, and Safaricom. Interest largely, we do think that interest largely in those, especially KCB and Safaricom, is largely because of the interim dividend that is whose book closure is actually next week on 2nd and 5th of September. So I think that's what has driven largely a high level of turnover relative to what we've seen the past couple of weeks. So we expect probably past book closure when they begin trading ex-dividend. There may be a reversal, but as it stands...
By ex-dividend, I mean, are you looking at the price less the actual dividend paid as the theoretical price?
Yes. After book closure, our prices will have to adjust. I think that if you look at the past 2 weeks, KCB today we've seen touched its 3-month high. Safaricom itself as well. So we feel that after book closure, where they begin trading ex-dividend, in other words, if you buy them after that date, you'll not be eligible.
So we really, if Safaricom is at about 28, we should be expecting an almost 2 shilling correction downwards?
Probably, given they have a special dividend of around 1.87 shillings, total dividend or rather.
The total dividend.
Yeah, so largely, possibly a reversal,
26, 27, and then KCB, that would be about 40? Or 39 actually, because it's one shilling.
1 shilling.
Okay, wow, interesting. So the key dates we need to look out for is on the 2nd and as well as the 5th of next month. Just taking you back to KCB, the end of the month is here, and I don't know if you have seen any numbers out on the NBK offer.
In terms of what they released earlier on in the week, they have received about 77% acceptance from the ordinary shareholders.
So it's actually a success.
Yeah, actually a success for them. We largely expect possibly they should be listed. Today is the last day for holders of NBK ordinary shares to actually take up the offer by KCB. So possibly the coming week, the additional shares may have to be listed at the NSC. So on that front, I would say things stand relatively okay.
So it seems like there are actually 2 correction points for KCB. So there's the dividend, and the market needs to correct that. But then there's also the element of dilution. Do you have a sense of what this dilution is? Is it about 5%, 10%? Do you have a...
No, it won't be significant because the current exchange, it's only around, 1 KCB share for every 10 NBK. So the correction, we don't feel it may be significant.
So really, if we see some KCB coming off from 40 shillings or slightly above 40 to about 37, we should not really be panicked. We just it's a normal correction.
And I feel for perhaps the market may view it otherwise because there's been the debate of whether the acquisition is really accretive to KCB shareholders, and obviously it's accretive to NBK shareholders.
Of course it is.
But for KCB shareholders, there's been that ongoing debate on whether it's accretive. So we feel that perhaps in the short term, given the huge outlay KCB may have to incur to possibly boost NBK's capital position, and as well as recovering of the huge stock of NPLs. So some players feel that that may have very interesting. I don't know whether to be excited or scared about KCB, because on one end you have it as a dividend play. Hopefully they'll pay the same dividend they paid out last year, but then on the other end there's also value dilution from this business that they've taken on. There was also value dilution from Fuliza, which is a new product that they launched last month, and the first half was about 5%. So is that something that you actually think will be replicated in terms of growth for the full year? Largely yes. You see, the performance has largely been supported by recoveries in non-funded income, but we are yet to really fully see the benefits by increasing their lending, their loan book. So given that they have to amortize all these fees and all these income over the tenure of the loan, so we do not expect any significant changes that come full year. So we expect something in the region of 4 to maximum around 6-7%.
4 to 7% growth. Okay, fine. A couple of numbers have actually, a string of results came out last night. Most important, Barclays Bank. How are those numbers for you? Are they below or above expectation?
We did expect a performance, relatively flat performance. We saw profit growing by around 2.9%.
Okay.
But if you actually look at the core earnings per share of Barclays Bank, it's actually expanded by around 18%.
Okay, interesting.
So what has weighed down the performance in profit, in absolute profit, is they incurred about half a billion restructuring cost. Remember, they are rebranding from Barclays to ABSA.
Okay.
So they have incurred a one-off restructuring expense of around 500 million. And we expect as they transition now into ABSA Group, possibly for the next 1 to 2 years, they may continue to incur these costs, but I think for any long-term shareholder, the underlying numbers, the underlying fundamentals of Barclays Bank, they've remained relatively strong. They will also be helped by the parent group, who decided to take a dividend waiver from Barclays. So I think
for what tenor, what period?
For the next 2 years, until full branding.
Does that have any potential impact on the minority shareholders with regards to their dividends?
No, the minority shareholders will still receive their dividends. In fact, Barclays declared an interim of 0.2 shillings.
0.2 shillings, yes. And do you have a sense of what the full year could potentially be?
They issue typically around 0.9 shillings.
0.9
so
shillings.
Total payout of 1.1 shillings, similar to what they had last year.
Okay, so the dividend play on this one still remains intact, and they have a good model.
Yeah, exactly. In fact, if you look at dividend yields across the entire market, Barclays tends to have the highest dividend yield.
That's true.
More than 10 to 11%.
All right.
That's equivalent to, is it 5-year bond?
That's a 5-year bond. We will be talking about the bonds, but you have preempted me.
Yeah.
Some other numbers that are coming through overnight as well: Jubilee and Liberty. What's happening in the insurance sector?
For Jubilee and Liberty, we've seen several things. If you look at the broader insurance market, we've seen that premium growth a bit positive, but on the other hand, if you look at the expenses, the claims expense, there's been an issue there. There have been increases in claims expenses.
But before you go to claims, so the premium growth is growing. So is it that the investment income from these companies is not growing? Because the total income line, at least for Jubilee, was not as strong. Yes.
In fact, now if you look at them now more individually, you'll see that, for instance, Jubilee, they had a very strong premium growth. But again, the expenses, they declined, the claims expense declined, but for them the biggest issue was a decline in investment income.
Okay, yes, investment income,
yes,
exactly.
for them a decline in investment income. So for them, they attributed this, they have significant holdings in securities in the NSE 20.
Yes.
Which, as we've seen, the NSE 20 is at its 10-year low.
Okay,
yeah.
Wow, even those numbers were out. Maybe we can also just quickly look at them. But before we actually delve further into the insurance stocks, look out for the closing bell. Again, don't go anywhere. Just another few minutes before we take our full break for the weekend. See you shortly.